Good afternoon, everybody. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. No real change on my position disclosure. Probably a minimal, if any, real change on my sizing on any of my positions today. It was just a really boring day. Disappointingly boring, I would say. So some of these days this year, I've been almost like happy when we have like a tight day where like nothing is going on, because there's been so much volatility. But not today, because I keep wanting to see if this market can give some upside follow through. Do I have a false tail here? That's annoying. And we haven't been able to. SPYs for some reason are giving me this false upside tail. It is nowhere near the high of the day. That's SPY 400. High of the day is like SPY 395, 80 or so. It was a really tight day. So here at the end of the day, we are down 0.3%. I think we gapped down 0.25% this morning. So we're pretty much unchanged from where we opened with that little bit of a gap down. The Qs are weaker, down a full percentage point. Some of those FANG names, most of those FANG names were very weak today. Tech in general was very weak today, despite TLT being up and still holding above $100, but the dollar was also really strong today. And finally, the IWM off a half a percentage point today. Back over the big picture again, this upside tail here is confusing, but it's just a really, really tight candle for the SPYs. The Qs were weaker. You can see that. Still holding above Thursday's low, which I've identified as an important near-term level. The big level is the low from the CPI day that we had over a week ago now. And the IWM, also a tight day, still holding above Thursday's low. You can see here on the daily chart that the Russell overall recently has been a bit weaker than the SPYs and the Qs, because on Thursday last week they were able to trade below but not close below the CPI day low, which is the bigger, more important spot for this market right now. So, broadly, the big picture for our market as of today's close, there we go, my SPY candle corrected itself. Broadly, the big picture after today's close is I got no real update for you guys. Our downside levels here, which is where I'd be more concerned because the picture will begin to change, we've still held that. So if we really start to lose the low from Thursday last week is the more immediate level, and then again the CPI day low, we really start to lose those levels, then the big picture of this market changes. Right now on the small and intermediate time frames on the daily chart we are bullish. The big picture on the daily chart we are bearish. We discussed last week how usually when you've got that, more times than not, it's the big picture that eventually outweighs the smaller picture, but obviously not always. So for the moment, my broader game plan has been to err to the side of the longs. I'd rather be long than short for a bunch of reasons right now, not just including the CPI, the Fed beginning to slow down, China beginning to reopening, There's little asterisks on the China reopening. There's asterisks on the Fed, slowing down. There's the hikes. There's asterisks on the inflation numbers starting to come down. And then on top of all those generally improving things, at least recently, we got good seasonality here into the end of the year. So we'll see if that can continue to positively impact markets. But, this candle here in the SPYs really doesn't give me anything new to work with or anything new to really update you guys on. I would say, very broadly, not trying to overread things, that today would be slightly more bearish than bullish, because some of those FANG names are super weak. The Qs were a little bit weaker, but again, overall, at the end of the day today, just a really tight trading session with nothing to talk about. We had an immediate quick uptick for the market. Some of those FANG names gave a good immediate quick uptick in the first 2.5 minutes of the day that got me a little bit excited. But then they kind of just all failed out. We couldn't really break highs here on this bounce, and then we were breaking back down. If you thought that this market had a chance to the upside today, which I did, that was pretty much done by this 10-15 or 10-20 candles. When the market couldn't make a wedge here and couldn't break up, and then instead was breaking intraday levels to the downside, any chance of getting that upside follow through really kind of deteriorated. And then, nothing's going on. And we had an interesting little uptick at, 130 today that had me think that we could get another afternoon rally, because we've seen pretty consistently on a lot of days. And just going back a couple days here, we had it on Friday, we had a little bit on Thursday, even back on some of these gap up days that we kind of had when the market was at more elevated price points. We've seen an interesting amount of early day weakness and afternoon rallies. So I thought maybe that was what was beginning to take place when we started to uptick around 130. We broke like a little bit of intraday resistance at like 110, kind of created this bullish consolidation. Looked like we were giving some upside continuation through that bullish consolidation, but then it amounted to nothing. This pullback was not the end of the world, a little bit deeper than you want it to be, but the pullback wasn't the end of the world, just a 15-minute pullback at 2 o'clock. We tried to create the pivot, go higher, but we could not break to further highs, and then once again, this is your real failure candle, and then once this candle came in for sure, any thought of that afternoon rally kind of goes out the window a little bit. Very similar to once we kind of broke down here at 10-15 or so. Any shot of that opening rally or further continuation for Thursday's pivot was kind of out the window. So again, just an overall slow day with not too much to talk about. So that is the market. Individual stocks. One thing I really traded today, which was not my game plan, it came from one of you guys in the morning meeting, was this Coupang, which ended up being a disappointment also, but the CPNG, overall the chart's been okay here, has built out a very clear resistance level of $20 with an inside day. The thing that got me excited about it more than anything was the relative strength on the second candle of the day. I know that this is a Chinese company, so it's going to have a lower correlation to the market. But, what I'm always paying attention to when I'm seeing, like, with the market, this big tail here on the first candle and then the continued weakness on the second candle, I'm always trying to figure out what looks different. Whether the market's working its way back up, or I should say whether the market's really strong, I want to see what's different, what's not participating, or the market is pulling back. I want to see what is strong, what's also not participating in the sell-off, I guess I should say. I always want to see, like, when the market's giving me a move, what if anything out there is holding up? So there was a few names that we kind of discussed in the morning meeting today that were on the radar a little bit that I thought looked interesting, like this STNE got mentioned. This Unity's been on the radar like for a couple of days that you guys have brought up. The CPNG got brought up, and then again, second 5-minute bar of the day, I'm looking at this market being super weak. There's nothing going on, and I'm like, oh, okay, but the CPNG, it's got the inside day, and it has the 20 level. Like, this is actually holding in really, really well here. So I like initiated a feeler like 1972 or something like that, and then as this bar closed, added, and you had your break of your inside day, so I was able to get a little bit heavier. Gave this real nice momentum move here up to $20.25. I got my 1-to-1 kick, covered my risk. I sold some more of my positions so that it'd be a winner no matter what. And then I plan on just trying to be greedy and hold for the rest of it. We got this quick downside pivot that came in, but that could not lead to new highs. And then when the market weakened, this thing just totally fell apart and died. I got stopped out on the break of the 935 candle on that low. I got stopped out like right here, and that just turned into being a small winner for me on a day when nothing was really going on. Microsoft was also one that I had an interest in, based on the daily chart here. I had gotten involved in Microsoft real early through 242, and this looked great off the open. A lot of stocks gave it really strong initial upticks. Like Amazon gave a really strong initial uptick that I thought was interesting. Google was being really strong off the open. Meta gave a really strong initial uptick. Apple right away wanted nothing to do with it, was not participating. But Microsoft was like the best out there. So, was able to be involved in this Microsoft for this kind of up move. It was building out this flag, and I remember saying to you guys, like, if I felt like I had any confidence in this market, you could look to buy or add off of this low, but I just don't have it. And then, of course, this thing ends up kind of failing back down along with the rest of the market. It did manage to hold its opening low very impressively. Nothing else did. So Microsoft is the best one out there. I still like this daily chart. Don't love the tail today, but I like this daily chart, so I will continue to keep an eye on Microsoft. But these other ones just totally failed. Like this Google, I've been trying to build out this nice upper level bullish consolidation up here. The ADMA had been catching up. Google's been relatively strong for a while. It was relatively strong off the open. And then I don't know what happened to this thing. This thing just really kind of fell apart and was just super weak. Amazon tried to be strong in the first couple of minutes and then totally failed out. But this Amazon has been the weakest one on the daily. So it's less surprising to me when I'm seeing Apple weakness really come in, and I'm watching Microsoft holding up better, I'm watching Google holding up better, and this Amazon, okay, Amazon's playing its regular tricks and is being super weak, super weak, super weak. Weakest one out there, honestly, in this period of the day. And then it put in a hammer on higher volume, on some extension. I called out a long off of that. It was also feeling bullish here on the team. Had a downside target on the move down at $91. Oh, and by the way, Pat had a great short call out. I missed the review of that. Pat called the short of the break of this bar on this candle off the relative weakness. So that was a fantastic short if anybody took it. But then here at 1050. Feeling bullish, has his target at $91. He thinks that area is important. I'm looking at it like, man, this stock's getting pretty extended to the downside, considering it's almost 11 o'clock. I got a hammer candlestick here. I got an increase in volume. So everything I'm looking at here is telling me that I've got in excess of a 50% probability of getting a snapback to the ADMA on this time frame. And then your kind of upper band of equilibrium, this 21 would be target number 2. So I bought some Amazon on this candle here. Was able to get that snapback. That low actually held. It was interesting. Amazon, which has been so bad so consistently, seemed to then hold in a little bit better in the afternoon, whereas Google, which has been a stronger one really consistently recently, just totally fell apart and was just making new lows and new lows and new lows all afternoon. One of several things, this review is reminding me, one of several things that I have found tricky about the market very recently is that I feel like the relative strength and relative weakness has not been consistent. And that's nothing that's too new on slightly bigger pictures, meaning like you can have a stock or a sector that's been very relatively strong, like overall on the daily chart, and then it's having a day where it's relatively weak, right? Because mean reversion or whatever. Like, so it's nothing unusual to see, okay, today this stock or sector is relatively weak, but overall this stock and sector has been relatively strong. And very recently it's been seeming like the relative strength and relative weakness intraday hasn't even been consistent. And you can even see that just like between indices sometimes, like looking at the IWM versus looking at the Qs. Like off the open today, my biggest concern this morning was the weakness in the Qs. And as a matter of fact, at 9:50 this morning, the SPYs were like testing highs and getting back above their 821 EMA. And I'm like, okay, like this is a big pivot here. This is a great looking, positive Maribozu, albeit not on fantastic volume. Like these SPYs aren't looking too bad. And these Qs really led us higher. The Qs actually even ticked above that opening candle high, and they're getting back above their 821 EMA. And they also had a good candle here at 9:45. I'm like, man, Q's really leading us up. I prefer for the IWM to lead us up, but notable, Q's are trying to participate, and the IWM was the one that was concerning me. I was like, guys, this is just a kind of a bearish snapback to equilibrium. Let's see if the IWM pivots here and leads the market lower, which is, of course, what eventually happened. But then at some point today, it seemed like it switched, where then all of a sudden these Q's played massive downside catch-up. They were making new lows. They were kind of becoming the loss leaders. Some of those FANG stocks really deteriorated. And then it was like the IWM was kind of holding up a little bit better and trying to lead back up, at that 1:10 p.m. rally that I mentioned that could maybe give an afternoon rally. like all of a sudden you had this IWM that's working its way back to day highs, which I thought were really important if it could get back above. And then look where the Qs are at 110. Significantly weaker. Nowhere near their opening high when the IWM was trying to do it. There's been a lot of, I feel like, flipping of relative strength and relative weakness intraday. Even between like a Google acting really strong in the beginning of the day and an Amazon, which was strong for 2.5 minutes, and then being the weakest, flipping to holding in much better while Google continued to deteriorate. It's really hard price action. And again, I don't want to overread today because I think that today the market was very quickly telling us to be more hands-off. You know, pre-market, I thought that there was a glimmer of hope with this gap down. Could be a little bit of a buying opportunity that could give us continuation off of the low from Thursday. But you know, again, pretty quickly the market was telling us that wasn't necessarily true. So I already knew it was less is more type of day. But it's like on top of that, this flipping of the relative strength and relative weakness. And you got other things here like the VIX seems like it's been so consistently weaker than the market has been strong recently. So that hasn't been a fantastic signal for longs in the market at all recently with what the VIX has been doing. Again, granted, our other layers of probability certainly weren't there. The dollar being relatively strong certainly doesn't bode well for the market. But TLT was okay. The treasuries were holding in. Honestly, the way in which treasuries were holding in made me think that maybe we could get a little bit of relative strength from, you know, tech type stocks. But again, the market pretty quickly showed us that wasn't right either. So yeah, so just a day of a tight day for the market. I don't want to overread it, but certainly a lot of mixed signals out there, and not a whole ton to really do that the market was kind of, you know, giving us to bite on to. So I'm happy I was able to make a few bucks in Coupang. I'm happy I was able to make a few bucks in Microsoft. I'm happy that I don't let myself get hurt or get in the way of anything. But yeah, overall just you know, nothing to do, and maybe it's just because we're coming into a holiday week here. I don't know. We'll see what the market provides us tomorrow. That's all I got. So happy to take a look at anything that you guys are doing. What's our Zoom doing after hours here? Zoom back down. Zoom back down. These numbers didn't look great, but didn't look terrible. They beat on earnings, missed on revenue by a bit, and guided down by a little bit. All right, questions. First question I'm seeing is from Andrew. Can you define a day one? So day one is going to be a pretty broad term that we utilize. It basically means that the market gives like one initial bigger movement day in a direction. It could be to the upside or the downside. You have like a day one up or a day one down. Just you know, some quick examples. One would be the CPI day was like a day one for the marketplace. In this last bear market rally that we had in July, or even the one in October, you can see here this big Maribozu on higher volume was like a day one. Then you got a day two and a day three. Similar situation when we had the 3-day rallies that were in July. You know, bigger day one, some follow through on day two, day three. Bigger day one, follow through on day two, day three. I particularly like looking for day ones that are also breakouts, or that are also days that I guess I should say are technically important. So a breakout would be an example of a day that's technically important. It's probably not the only one. But basically what I'm looking for, and a lot of what my approach is based off of, is trying to identify these day ones, these like the first big up day, the first day that there's going to be technical or fundamental upside that's coming into the market, and really making sure that I'm participating in the market on that day one. Because day two and day three, if your day two and day three actually even occur, are always going to be more difficult trading sessions where you're going to be entering with a worser risk reward and a lower probability of success. A day one does not guarantee a day two. I don't want you to think that day one necessarily means that, you know, we're going to have day two. That's not necessarily true. A day one is just that first big wake up day, and then you always want to see, can you get a day two, can you get a day three? But the further the market goes, the lower the probability of being able to get it. And also the worst risk reward on the entry points. Like, again, just using some recent price action, day one CPI day, a fundamental event occurs that causes a really big gap up and really good continuation on really high volume. day 2, you get continuation on day 2, but this is a much worse day to buy. And I'm sure that I was saying on this morning meeting not to buy, because it's going to be trickier. You're coming in on this day 2, which also was a gap up, and you want to buy, SPY 396 with the ADMA down at, SPY at 386, like $10 of extension on this gap up after this massive move yesterday. You're inherent, even though the market closed on highs that day, you could have bought this open and held all day and made money by the end of the day. That's always going to be more difficult, a worse risk reward, because you also get days like what we just had. You could have argued that Thursday was a potential day 1. We had the gap down on the Fed speaker language in the morning. We identified that as a great opportunity to be able to buy that gap down into equilibrium. We closed really strong. I wanted to see if this was would give follow through to a day 2 or to a day 3, and it was very disappointing that second day. We kind of gapped up. We were weak. Fine. It was the a lot of options expiration going on, which can make for some wacky price action, but just zero follow through. And then again today, zero follow through. So day 1 is that first real candle, that first real day of the move, and that's the day when you have the best risk reward and you have the most amount of opportunity. Obviously, looking at charts is in hindsight here is 2020, and it's significantly more difficult to try to identify the day 1 before it happens. But that's what I am very specifically and very consistently trying to do, is identify the spots where it makes sense technically and or fundamentally for us to be able to get that day 1, getting involved in that, capturing that upside move, closing with a good price profit cushion, and then holding that position overnight to see if I can get that further follow through from day 2 and day 3. Hope that helps, Andrew. From Andy, did I view that as an ignition bar? Talking about Coupang. I did not view it as an ignition bar. I mean, to me, an ignition bar is a very specific thing. It's a bar in which a daily level breaks, a daily support level or a daily resistance level breaks, and it needs to be confirmed by higher volume. So it's the 5-minute bar or a 15-minute bar where, for example, a resistance level breaks and it's going to be confirmed by relatively high volume. This candle here is definitely not confirmed by relatively high volume. As a matter of fact, it's the lowest volume of any of these bars around here, and it's not breaking a daily level. And I don't consider the break of an inside day to be the break of a daily level. I want to get that across also, which means that the 5-minute candle or 15-minute candle in which an inside day breaks is not an ignition bar. It's not a resistance level. It's an inside day. Inside days are rest days. They're not resistance days. They're not resistance levels. Maybe sometimes, I would argue that $20 is a bit of a resistance level. Maybe you have an inside day where the high is exactly $20. Then okay, fine, your inside day high is corresponding to a resistance level, and that puts them both kind of as a factor. The reason why I use this bar as my stop instead of this bar, and the first thing I would say is using the low of the day is certainly an appropriate stop loss. It's an appropriate stop loss. You could definitely use it. I didn't. I used the low of the second bar of the day, which is a little bit riskier. When I was watching this while the bar was forming, I really wanted it to be an inside candle. That would make this afternoon meeting much more straightforward on why the stop was the inside day bar. But basically, there's no extension. I like that, right? If this candle, this exact candle on this low volume was occurring in a higher area because, let's say that the stock opened up flat, and then this exact candle number 1 here, happens, but starting from a flat position. So now we're all the way up here. And now candle number 2 is happening. That's happening in a level of extension. The ADMA would not be at the low of the second 5-minute bar. Therefore, I would not use that candle as a stop loss. But that's not what happened here. Stock gap down, went green. It's showing good relative strength. I really like that. This candle's low at that point in time is into this equilibrium area. So I feel like if this low breaks, it's showing me that my idea is wrong. And as we've discussed, that's really important to me. I don't feel that I need to give it all the way down to this low. And then pretty much right after I started with a feeler. Also want to point that out. Started with a feeler. This candle's not closed yet. And then I sized up as the candle was closing, as it was breaking higher, and as it was basically beginning to break the inside day high. And then at that point, I'm like, all right, I got the relative strength. I got this low, which does have a little bit of a tail here, into the equilibrium zone. I'm using that as my stop loss. I feel like my idea is wrong. If it breaks below that, it shouldn't be able to break below that, especially if this market can begin to recover at all. So that is why I used it as my stop, but it is not an ignition bar. If that helps. From Tate, you've stated in the past that reading the level 2 in ETFs gives you most of the time no value compared to reading it on a stock or a name like Apple. I think the last time you said it was revolving around, I think, the Spider ETF. But do you have the same mindset if you are looking at an index ETF like SPY, Qs, IWM, that the level 2 isn't as revealing or not a factor whatsoever in your daily ETF trades like Labo? I don't think that the tape is a factor in any ETF. It's more so for individual stocks, and the reason why it is pretty simple. So I'm trying to figure out of what the best example to use is. You could think about the SPY because it's an ETF that represents 500 stocks. You could use Labo versus XBI that you're also mentioning here as an example. Like the Labo, I'm like 98% sure, but maybe I should be fact checked on that. I'm pretty sure that Labo, very simply, is just the 3x leveraged XBI. So that means that they should move in tandem with each other, except Labo times 3. So, what are you reading when you're reading the tape? You're reading natural buyers and natural sellers in the tape that can affect the stock, right? Like if all of a sudden this Zoom right now, which is on earnings, oh look at that, right now, ARCA 7720 is a refreshing seller. You can see that it's showing like 100, 200 shares here on ARCA, but it just printed 2,900 shares, 1,900 shares, and all these single 100 shares. There is a seller here on ARCA at 20 cents. It looks like he actually just dropped down. But at least, and I haven't been watching this at all until this moment. But there's a natural seller there that is using a refreshing order to sell more stock than he or she wants to show. Sometimes they show it. I don't know how much that ARCA seller is there for to sell in Zoom, but I know it's more than what he or she was showing, right? Because only 100 or 200 shares was shown, and like 6,000 shares just went off on the offer there at that price. Sometimes they show it, much less nowadays than they used to, but maybe instead of, maybe that seller is there because he needs to sell 50,000 shares, and is trying to be sneaky and is trying to disguise and work the order. That's smart. But sometimes they're like, what, here I am, here's my 50,000 shares, and show the entire size. Like that means something in this stock. There's a natural seller there. What does it mean? It means that if I'm trying to be long, that person is in my way and is going to make it more difficult for my stock to go up. And if I'm trying to be short, well then that person is helping me out and it's making the stock weaker. And I could, in theory, if I was really able to identify that seller staying in that spot consistently, could lean off of that for a short sale. Or if I want to go long the stock, like for some reason I really want to go long Zoom, but I've identified this natural seller who's either refreshing or showing his size or whatever, I can wait for that thing to actually break, and then I know that I can be reasonably assured that the seller is out of the way, and now I can look for the upside continuation that I'm looking for whatever reason. That's in a stock. If you go to an ETF, the SPY is moving because of the S&P, which is moving because of the totality of 500 stocks. Or let's say that there's a natural seller in Labo, but Labo is just going to move on the XBI. So if the XBI is going up, but there's someone who is trying to, which is also, by the way, composed of however many stocks are making up that ETF. So like every time you buy, just using the SPY example again, 100 shares of Apple, you are actually moving in a very, very, very minute way the SPY itself. So if I've got a natural seller in Labu who's refreshing on the offer or is showing size on the offer, can Labu have an effect on the XBI, which can have an effect on every single stock on the market? Yes, it can, but more than likely it's going to be the other way around. If there's a seller who is holding Labu down, albeit briefly, but XBI, which doesn't have that seller, and all the stocks that are composed of XBI that don't have that seller are moving up, it's an arbitrage opportunity. And it's not going to be an arbitrage opportunity that you or I are going to be able to take advantage of, but it's an arbitrage opportunity for algorithms that are computing high-level mathematics to come in and take advantage of. So they're going to go, oh, look, Labu is trading at a price that's lower than it should be trading at because there's some seller here based on where the XBI is and based on where all the stocks are of the XBI. They're just going to light that seller up until it's gone because, it's an arbitrage opportunity, and then immediately the thing should be able to be higher because they're going to be trading in conjunction with one another, and then that trade's gone. So identifying that natural seller in Labu is going to have no positive effect for you. If there's a massive offer that comes in, that big size order that comes in on that type of ETF, and it holds down the stock for half of a moment, it's that entire offer is just going to get gobbled up super fast by a robot that's like, yes, thank you, appreciate you for coming in and selling here so that I can make a couple pennies on this arbitrage opportunity. So I hope that helps, Tate. From Steve R. I too have been holding and trading around SoFi for a while. The company has consistently exceeded quarterly expectations for sure. Yet the stock has been absolute and utter trash. I'm adding words into your comments here that are my own feelings. The stock has been absolute trash, and it keeps dropping and dropping. I love your thoughts, thesis on the stock company. Yeah, I mean, we got the same thought process here overall. Honestly, of every stock that I'm like swinging, that I'm involved in, and that I'm trading around, SoFi is probably my worst out of all 13 names that I'm in from a P&L perspective, which is unfortunate because I really like what this company is doing. I think a lot of times it gets lumped in with like an Affirm or an Upstart, which also have elements of fintech, but I just think are significantly worse companies. So I really like SoFi. It's a bank. This type of company, I think in the long run, will print money. At this time in the process of the company, they're spending boatloads of money. But that's fine because they're doing it to build a bigger customer base, and I think that those banking margins that are helping the XLF and helping Goldman and these other banks are going to come into play on it. And I like how it's a forward-thinking bank. I like, we've talked about it here in the VTF, go check what your checking account is yielding for you right now. SoFi will give you 2.5%. There's not too many others out there that are going to be willing to do that. And if you got a decent amount of money that's sitting in your bank account in cash, do you really want to stick with your bank account at Bank of America and get like whatever, I don't know what Bank of America is giving, 0.2%, when you can get 2.5%? Yeah, maybe. It depends, I guess, if you are the type of person who's got $150 in their checking and savings account, or you got $150,000 in your checking and savings account. So I like SoFi. It got hit a little bit on a headline today about their involvement in crypto, which I already know is very minimal. The stock can't get out of its own way. Now there's certainly some problems here as well, and I think that the problems are less with the company and more with the stock. And there's a good expression that you can have a good company, bad stock. I kind of think SoFi is really fitting that bill. The float in SoFi is so big. The stock trades so dang thick. 100 million shares today, 98 million shares today, traded. It's so thick that like when a lot of these types of growthier type names begin to squeeze up, I feel like it doesn't squeeze up properly. But then when all those sectors begin to roll down from real selling, it rolls down also. And they just keep selling good news when it kind of comes in, and it's been consistent. Back here in August, this was a great earnings report, held up for a couple days. They sold it back down. This last earnings report I also thought was a great earnings report. They sold that gap. They didn't even wait. They sold that gap that day. The stock problems, not the company problems, the stock problems come from a few things. They bought out that other company. I don't remember how long ago that was. That was really the beginning of the end of this thing trading well, by the way. This thing used to, even in this downtrend here, the stock always, I felt, traded well. And for me, that's really important. Because for me, for how I trade, I can be long a stock that's downtrending if it trades well, and I can actually make money from it. And here, the stock was really weak, but it like traded well. And then I think it was in April that they announced that they were buying that other company, and it was a stock deal. So it just added to the flow. It made the thing so much thicker, and there's just not enough demand out there to match properly or to create price improvement from the stock. Now that this thing has gotten so thick. On top of that, like many growth companies, you've got all of the employee stock benefits that have also just been kind of, consistently making the stock heavier and heavier and thicker and thicker. So that's really what it comes down to. And then you get a piece of bad news, which honestly today's news I didn't think was bad. But you get a piece of bad news, and then they just kind of sell this thing off even further. So now this thing is back at a really big support level, which is all-time low. It's just like $4.80. Held it back in May, it held it in September, it held it in October, it's testing it again in November. It shouldn't be down here. It shouldn't be here. And it's very concerning. Because as much as I have a thesis that I like the company, I like some of the stuff they're doing, the CEO I think is a little bit overpaid, but I don't think he's a bad CEO. This thing just can't get out of its own way. So yeah, that's kind of where I'm at with SoFi, where my head's at with this SoFi. I keep working it, I keep sticking with it, I keep putting some money in my pocket into these bigger up moves when they come in, but there just hasn't been any follow through from this thing at all. I mean, this 200-day is just declining in a massive way at $7 now. I still think that my price target, if you will, I really think that this thing belongs at $10, which is a double from here. But when I watch the thing trade, I'm like, man, this thing just doesn't trade right for that kind of move. So I'm sticking with it for now. Continue to monitor it. We'll see how it plays out. From Rex. Rex got long some NVIDIA today at 10:45. Okay. When I noticed the market was making a new low, NVIDIA was holding up. I like that thought process, but I didn't have a lot of conviction because the 15-minute chart looked bearish and the 5-minute chart just went above the 8 and 21 EMA. Yeah, not a great. So far, everything you're saying is spot on. Stock's holding up better. It's holding up better than the Qs. You got some relative strength here. We're also starting to get into a tougher time of the day. It is kind of in a range here. But you know what? You got that relative strength. So if you think in any way that this market can, turn its way back up, around this time of the day, and the Qs can lead higher a little bit, that this is probably a good one to be involved in. So I like all that thought process. I like that you're saying that you didn't have a lot of conviction in it either, because that's also a good thing. When you don't have as much conviction, which was me on basically everything today, when you don't have that much conviction, I think that it just means that you want to trade lighter. So here you're identifying an important layer of probability on the side of the trade. Got a little bit of a trade for yourself, but you're also identifying some things that are against the trade. You don't have a ton of conviction, but maybe this trade is worth it to you for a smaller amount of risk. And if you did that, I like the thought process. You caught a little bit of a bid here, so not bad, not bad at all. So how would I trade it? The way I would trade it would be exactly how you described it. Just would not do it with a ton of size. Next question is from Cameron. I sized up today after a few weeks of solid consistency, and I had a max loss day. Is this my signal to size back down, or should I trade a full week and evaluate from there? Sure, so great question. So first thing I would say is congratulations on the improved success. If you've had solid consistency over the course of the last several weeks, you're looking to size up, that's exactly the right thing to do. When it comes to sizing up, I really think that the key to sizing up is to size up small and consistently. Small and consistently. Don't make huge size jumps. You know, I've talked about this in the past. You know, whatever your max loss was for the last few days when you were having a lot of success, and you want to add to it because of the success, add maybe 10% onto your max loss. Maybe, you know, somewhere around that area, depending on how big your original max loss was. Maybe it's a bit more than that, but just to throw a number out there to emphasize that it should be smaller. Add, you know, 10% overall to your max loss. So you don't want to be going from, you know, small swings to massive swings. It's a recipe to give back 3 weeks of good trading in a really small period of time. Size up small, size up consistently as you see continued success. As you size up, you also need to recognize that you need to have a kind of a scale to your overall size. Meaning, you know, one of the big themes I love to talk about is just knowing when to be more aggressive overall with the market and knowing when to be more passive. The last, you know, week and a day here, to include today, we really haven't had much to bite onto. Right? We really haven't had too much to bite onto since the CPI, with the exception of Thursday giving us really good opportunity. The days post CPI here were not good days to be trading heavy because the market was too extended. You know, we weren't too extended. We were not extended enough. I felt to really short. I think I did a little bit of short selling on the one day when we were like above 400. But we were too extended to be heavy. So these were just days where you wanted to be a little bit more passive. But then the gap down was the day to be more aggressive. And then today you could honestly probably make an argument that, you know, pre-market, that today was somewhere in the middle. Like, we're not so extended anymore. I can be a little bit more aggressive. I want to see if I can get follow through off of Thursday's pivot. But then also really quickly you're like, wow, the market price action is not confirming that thought process, so I want to pull back. So I would say, you know, you're always going to have losing days. You're always going to have losing trades. And if you had a max loss day today, that is really unfortunate. I hate to hear that. But I'm really glad about the success overall. I don't think that one day is enough where you should be sizing back down. I think that you should have recognized that of your newer, bigger sizing, today should be using less size of the new, bigger sizing. If that makes sense, that's the point that I'm trying to get across. Or maybe right off the open you were trying to be aggressive, but like I was saying, pretty soon thereafter, you knew, hey, I really need to take a pullback on that increased size because the market's not right today. But overall, I think that you should continue at the higher size based on the success that you've had. Today is just one day, but also make sure that you didn't size up too much too quickly, and also make sure that you're still taking each day as a case-by-case basis because not all days are created equal. So absolutely love the question, love the overall success that you're talking about, and it's kind of a dynamic multi-part answer there. Good stuff. Tate from Galena, can you please explain an inside five meaning? Sure. So an inside five is an inside 5-minute candle. So the concept of an inside candle or an inside bar applies on any time frame. And if someone says an inside 5, it just means an inside candle on the 5-minute time frame. An inside 15 is an inside candle on the 15-minute time frame. An inside day is an inside candle on the daily time frame. An inside week is an inside candle on the weekly time frame. And again, what an inside candle is, or an inside bar, is a candle whose range is within the previous day's range. So the high and low of that bar is within the high and low of the previous bar. So again, just got my spies up right now. November 16th was an inside day for the spies. The low on November 16th is 394.79. The low of the previous day is 394.49. So it's an inside day by 20 cents on the downside. And then the upside's not even close. The high that day was 397.78. The high of the previous day was 402.31. So that's an inside day. It's a candle, a daily candle in this instance, within the range of the previous day. An inside 5, I don't know, typing up Apple, I'm sure there's going to be an inside 5 somewhere. Right here. Here's an example of an inside 5. It's just a 5-minute candle that is within the range of the previous 5-minute candle. And again, within the entire bar's range, so that includes tails. It's a question I get a lot. What is the significance of an inside candle? An inside candle basically represents a period of rest. And the very broad inside candle strategy that I'm going to put a massive asterisk next to in a second is very simple. You have an inside candle, which is this rest type candle. Your trade is to buy or short the break of the inside candle for continuation. Like, you would never trade this one, but whatever. It's an inside 5. The next candle, it breaks up. So if this was one that you would trade, which again it's not, I'll explain why in a second, you would buy the break of the inside 5 right here, and your stop loss would be the other side of the inside 5. Or, yeah, I remember mentioning in Coupang, I was looking to see if this candle would close as inside 5. Oh, there was plenty of inside 5s, actually. I remember I was looking at the Google one got called out, second 5-minute bar of the day. The Microsoft one got called out, and I remember comparing the Microsoft inside 5 this morning to the Google inside 5 this morning. Because I was like, I like that Microsoft is even more relatively strong, but I don't like that the inside 5, if you want to trade off of it, is this extended because there's a higher probability of a shakeout. Where Google is also relatively strong, maybe not quite as strong as Microsoft is, but this inside 5 is not extended at all. So I liked the idea of buying this inside 5 break to the upside. This is before we knew that the market was going to be crap today, to see if this relatively strong stock, which has also been relatively strong on the 5-minute, relatively strong on the daily chart, can give upside continuation there. Crypto firm Genesis warns of bankruptcy without new funding. So that's what an inside 5 is. Now, I mentioned that the strategy, and we can stick with Google because it's a better example than that crappy inside 5. The strategy here would be to buy. So what's happening? The first bar is a very wide-ranging bar. In this case, it had some momentum, but then it kind of came back down. A lot of volatility in that candle. This next bar is tighter. It rests a little bit. It gives us some more clarity. I'm looking for continuation on the strong chart. I can buy the break of the rest candle. I can buy the break of the inside 5. So the high of the inside 5 is 98.11. So I basically would look to buy 98.12. And your stop loss, in this case, sometimes we use the low of the outside bar if it's a trend continuation candle. But I don't want to get too complicated for you for just presenting this concept for the first time. The stop loss is basically going to be the break of the inside 5 on the downside. The inside 5 is 97.67. So you would buy basically your risk is the range of the candle. So you're buying this thing and you're taking 44 cents worth of risk, looking for a continuation of that strength and everything else that we discussed. I like that trade. Trade failed, but I like that trade a lot in this circumstance. Now, here's where the big asterisk I mentioned earlier comes in. I wholeheartedly promise that if you trade every inside 5-minute or every inside 15-minute or honestly even every inside daily candle that you can find in the marketplace, and every time an inside 5 breaks up you buy it, and every time an inside 5 breaks down you short it, I wholeheartedly promise you that you will lose money at the end of it. You will come away as a loser. The inside 5 candle strategy should be used as an execution strategy. It's an execution strategy for when you like other things about the stock or the market that you're looking at. What are the things? Mainly trend and momentum. You got a good, strong, trending stock, and one of my favorite continuation patterns in a trending stock what's called an uptrending stock is an inside 5 and up into equilibrium. Meaning you got that great upside move, it pulls back into equilibrium, it gives you an inside 5 there, and you buy the break of the inside 5, hoping that that is the creation of a pivot point that gives you continuation. I also love hammers for trend continuation also into that same zone. That's a great spot to utilize the inside 5 strategy. Or momentum. Earning stock, or honestly this was even more of a momentum one. Big upside initial move, followed by an inside 5. That inside 5 is a quick break of that earnings momentum or news momentum or whatever momentum that was there in the stock. Get a quick break, and then you're looking for continuation. Sometimes we refer to that as a 1-2-3 play, a 1-2-3 trade. And that, again, that could be a 5-minute chart, that could be a daily chart. So that it's specifically an execution strategy for when you like other things, when you have the trend, when you have momentum. And in this case, there was other things that I liked. You know, again, a little bit of volatility here. This would be better if this first candle closed a bit stronger. But it's a wide-ranging candle with a lot of volatility, really good relative strength. The market is red. Google is green. One of the strongest stocks the second the market opened. The daily chart here is also strong. It's been building out this bullish consolidation. You don't know this candle closes like garbage, obviously, at that time of the day. So there's a lot of things to like on multiple time frames. The market is potentially on your side, right? Like we said in the morning meeting, is for now the market's telling us that we're still better off being long than short, everything else held equal. So there's a whole lot on your side. How do I get long Google? How do I get in? How do I get in? Everything's there. Well, bam, here's your inside 5 for execution. And then you're buying it on the way up on the break of that inside 5. Sometimes I'll cheat, meaning I have a reason to believe that the inside 5 will break to the upside. So I get involved earlier before that even occurs. It's a little bit risky to do it that way. The upside is you can get an even better risk reward. The downside is you might take a loss in something that never would have otherwise triggered. But that's a rough overview on what an inside 5 is and when, how you should trade it, and also when and how you should not trade it. No problem. From Sebastian, what do you think of going long gold for a swing? And how do I see it fundamentally? I like the gold miners now a little bit. Again, I didn't look at GOLD, but I was looking at GDX. I had GDX on my list this morning, but GDX ended up kind of being sloppy. You know, I could tell pretty quickly in the beginning of the day that GDX just wasn't right and ended up not being involved in it. But I like the miners generally right now. I like how this GDX got above 25. Is trying to create a higher low into equilibrium area. I don't know the specific fundamentals but behind gold here. Was this Rand Gold? No, it's Barrick Gold. I don't know the specific fundamentals of Barrick Gold itself, but I like the sector overall. Continued dollar weakness, if you can get that, will help. I think even if the market moves sideways, it'll help. And then we saw that headline that Pat posted today, which I took real strong notice of, on speculation that the Chinese are accumulating more gold to help lessen their dependence on the dollar, which I thought was really interesting because I tell you, it reminded me, someone just was asking me about the JNUG trade that I had, which is one of the best trades I've ever had, or maybe the best trade I ever had. The catalyst for that was back in here when we were reading headlines that Russia was accumulating physical gold, and I was seeing that stuff where there was and there was obviously a lot of weird things that were happening in COVID, like oil going negative, but there was like a big deviance between physical gold pricing and contract gold pricing at that time. So I saw that headline, I was like, oh, that's really interesting. That's an extra piece of information if what they're saying about the Chinese accumulating more gold is true on the GDX chart. So I like it. I like it. I think it should be on the radar now. All right, gang. I appreciate the questions. You guys turned what could have been a really boring, slow afternoon meeting into something with some more significance. So appreciate that. Just after 5 o'clock today, holiday week. Maybe tomorrow's going to be boring again also. I certainly hope not. But have a great evening, everybody. and I will talk to you all tomorrow.